Welcome to Techstep investor presentation in relation to the upcoming private placement. We will record this session, so for your later viewing. We will first start with a presentation and then subsequently have a Q&A session. The presentation will be made by Chairman Jens Rugseth, CEO Jens Haviken, and CFO Marius Drefvelin. We encourage you to use the Q&A function at the bottom of your screens to write down the questions, and they will be addressed after the presentation. And with that, I will hand over to Jens Haviken.
Thank you, Eric. I thought I will start up before entering into the slides to pass over to Jens Rugseth, our chairman, and let him explain in his own words as an investor in Techstep and as our chairman what he views are the most important drivers in the market and that Techstep's in, and the journey we're having ahead, and what opportunity he, from a personal point of view, think lies ahead of us. So Jens, if you can take it away.
Yes, thank you, Jens. I think I'll start with saying why I invested in Techstep in the first place. About 2 years ago, I was looking for other opportunities on the Norwegian Stock Exchange, especially within the IT sector. And I looked at several companies, and one of the companies I was looking at was Techstep. Initially, I wasn't too impressed because I thought the hardware focus was a bit much for my software heart and recurring revenue heart. But then I looked more deeply into it and saw that they had software solutions internally in Techstep that was really promising and really interesting. And so I decided that if the board and the management could agree with me that the future was more software and services, then it would be very interesting to invest. And I would say that we've been into a 2-year transformation that in many ways answers to the challenges that I've been through with many of my companies over the years. And that is that typically mobile devices, tablets, phones, what have you, has been treated by the IT departments in organizations as stepchilds that hasn't really gotten any focus, and that has been very strange because of the rapid development of technologies in the mobile space. Coming from when I was a young guy, we could buy mobile phones for 1 krone, and we could use it for talking and SMS, and that's about it. And then go forward 20 years, 30 years, we're in a situation where the mobile phones cost as much as a PC or even more to buy. It costs a lot more to operate. And for the companies, they are much more of a security issue than a PC has ever been. And the usage is such that you might have to replace it more often than what you do with PCs. And still, for most organizations, it's something that the HR department would handle. And especially in the last few years, environmental issues has been a big part of it as well. People buy a phone, use it for a couple of years, put it in a drawer, give it to the child, whatever, and people doesn't take the security issues, the management issues, environmental issues into consideration. And that's where I saw that Techstep had a great future amid some issues 2 years ago with a lack of having a complete suite of solutions to take care of this. But we defined already 2 years ago what is today called mobile management solution, and I'm not going to go into that because Jens is going to talk about it. But I think we've done a great job over these 2 years to really transform the organization and our product offerings to become a full-fledged software and services company with a hardware offering on the side. And that's why I think for the next 2-3 years, it's going to be very exciting, because our niche of the market will dramatically outgrow most other IT segments over the next 3 to 5 years. So now you know why I invested in you, Jens.
Thank you. So then I'll walk you through the presentation. We use the presentation that we sent out yesterday morning for your reference. So you might have it already, or that if you want to download it, it will be found on our website. So Techstep, as Jens talked about, our ultimate goal is to help people to do a better job. And we do that by delivering managed mobility services. And managed mobility services is a term that has been defined by some of the analytics companies, and in particular Gartner. And basically, it has 5 capabilities to it, and you have to answer all of them to be qualified to be, in their definition, what is called a MMS provider then. And just a month ago, we received an honorable mention in Gartner's latest Magic Quadrant for managed mobility services, but it stated that Techstep is the only player in the Nordics with a complete offering in this space. And that was, to us, it was a great achievement. We were very proud of that, and it also gave us confidence that this journey Jens talked about, which we started 2 years ago, moving from this, let's say, mobile reseller into a true managed services provider driven by our own IP and software has paid off. So what we're delivering is really an all-in-one service offering, where we take care of all the aspects an enterprise might have related to mobile or usage of mobile technologies. And typically we lead with our advisory services, and that is to help our customers to realize the benefit and the value that utilizing these tools can give. And that is not a big part of our business when it comes to revenue, but it's an important part of our business when it comes to drive the change the customers needs to get to this level that we want them to be. And to do that, we have 2 distinct offerings. And one thing is that we take care of what's on the phone. That would be the applications, protecting the data, all the security. And we define that as the platform, because the platform management. So typically, for instance, we have Equinor as a customer, and then we manage their mobility platform all over the world. The other part we do, and which we are most famous for maybe, is what we define as an asset management. And these terms, the asset management is not the banking part of it, but it's handling the device from it's procured or shipped from, let's say, the distributor, until it's not put in the drawer, but taken back, recycled, secure deletion of the content, what have you, and everything in between. So that it's break fix, it's insurance, we help people take care of their mobile subscriptions. And we have developed an IP and some software to handle that, which we call Origo Business Cloud. And we sell and package these solutions as Flow, which you probably have heard us talk about before. So that is what we do. And as most companies don't define managing mobile devices as core business. And as in the IT industry, which we can compare of, that when people get mature or these companies get mature, they typically outsource the complex stuff related to IT to specialists. And in the mobility industry, that will happen as well. So we are relying on the growth that as more and more companies getting more mature using these technologies, we will grow with the market. and probably also outpace the market, since we believe that we have the strongest value proposition there is in the Nordic market today. So that is what we do. We reported our numbers on Monday. And basically, we have a run rate last 12 months of 412 million in gross profits, 27 million of EBITDA, and an IRR of 66 million, which is, with this acquisition, will be increased by 40%, which we are very happy about. Jens talked a little bit about this, but something happened in 2008, as most of you might recall, where Apple introduced the iPhone. And after that, the smartphone has outpaced, let's say, the rest of the IT industry as the preferred device to do a lot of stuff on. And in the Nordics, there are about 28 million people living, and half of them are having an employer and working. On our addressable market, we have said that about the 14 million, we have said that 6 of them is in our target group. And that's a number of industries we have specialized on, and also we have also said that we are more suitable for larger enterprises. So our solutions, even if they can be used by SMBs, we add most value when it comes to somewhat larger enterprises. And that's why we have said that out of the 14 million employees in Nordics, as of today, we are targeting 6 million. We have 550 enterprise customers today. We are managing 200,000 devices. And given that partner and the MMS market is supposed to grow about on a CAGR of about 30%, we think that we have a lot of headroom to grow in the coming years. Done this right. One of the things that we have seen now over the years is that as the customer matures when it comes to the mobility journey, we also see that we are able to harvest, let's say, more gross profit from that customer. And the reason for that is, of course, that they achieve more value. They are taking more applications into their processes, and by doing that, it adds complexity, and the complexity needs people to like us to help them. And that is what we have seen. So if you take on the left-hand side, so a typical hardware or product customer of ours, historically, they leave about 330, 350 kroner per year per device. When we are able to shift them to the services stack, let's say this flow offering, we are typically seeing a gross profit average about 12 to 1500 kroner. Our average today is 800, and that's of course due to the mix that we have a lot of customers which still are on the left-hand side of the picture. But we are moving towards, let's say, the full service stack for as many customers as we can. The reason why it takes some time is, of course, that you have a lot of public agreements. They last for 2 to 4 years, and when you have the agreement, it's kind of hard to change it. But that is our focus every day, to convert existing, let's say, customers that's on the left-hand side in this picture and move them towards the right. And it's not only we in Techstep that move this customer. The need for digitalization all up will, I wouldn't say force them to move in that direction, but there's so much to gain from using these technologies that there's a lot of projects going on in almost any industry at any customer that starts using mobile technology. So that is in itself accelerating the adoption of what we deliver. So now I would like to introduce Marius. We have a couple of slides that you will take care of now. It's this one describes the journey. Please take it away.
Thank you, Jens. So during the last two years or so, we've had a significant change in the gross profit mix as a result of the ongoing transformation of the company that we have already talked about. And back in 2016, traditional hardware sales and operator commissions comprised 80% of the gross profit, and today it's 40%. And we have increased the gross profit contribution from software, advisory and services, and the leasing portfolio. And more than half of this is recurring revenue. Next page, please. And we have stated a clear ambition for further growth towards 2025. First, we will increase the number of managed devices from 200,000 to 1 million. And we will do this by converting existing customers to our MMS platform and win new customers. And in addition, we will continue to make acquisitions. And second, we will increase the gross profit per device per year from 800 kroner to 1,200 kroner, as you have also touched upon. And going forward, this will increase the MMS contribution and the profitability. And we have a target of more than 20% EBITDA to gross profit. And although we expect the CapEx requirement to increase, it is still on moderate levels and mainly relates to software development and IT efficiency investments. So if we move on to the acquisition that we announced yesterday, about Famoc. Famoc is a Polish software company which was established in 2006 by 3 founders. All of these founders will continue as management of Famoc, as well as new shareholders of Techstep. And Famoc delivers industry-leading software for managing and securing mobile devices, often referred to as Enterprise Mobility Management, or EMM for short. And they have 44 employees who serve enterprise customers and partners in several European countries. And their main route to market is through channel partners and its distributors. And the current ARR is 26 million. And they have had a growth of 15 to 20% each year for the last couple of years, and the EBITDA margin of 23%. And we're buying this company at 4 times ARR, and with a total purchase price, including cash, of 110 million, which is settled by 70% cash, 20% shares, and 10% seller's credit.
Then you're muted. Thank you, Marius. This acquisition will really enable us to be this all-in-one MMS provider. Famoc is strengthening our service stack with their software, which in turn will lead to enhanced value for our customers and increased gross profit for Techstep. And we have talked about that Famoc is the missing piece in our puzzle. And Jens talked about that a little bit when he started this morning, or in his piece. And with their added capabilities, we are able to deliver a complete service stack based on our own IP. In this middle layer before, we typically have used third-party software to deliver those services. And now we have an opportunity to use software that we own ourselves. We also believe this acquisition will give us a clear competitive edge, which will be hard to match. And picture yourself that when we are in competition, especially here in the Nordics, it's either with ITEA, Dustin, it might be some of the operators. And when we can have this unique piece of IP and software in our bag, and the others have to compete with the standard third-party vendors, it will be not easier, but at least we have an opportunity to differentiate both on capabilities, functionality, and on price. The one thing is that it gives us another software in the bag. The most important thing is that it gives us much increases our competitiveness. So one thing is when we take the Famoc software and let's say go northbound, that is obvious to us. We have been operating in this market for quite a while, and we have a pretty decent view on how to view that. And that is what I talked about just now. Another opportunity that is evident to us is that we can take the IP we have in the Nordics and move it southbound and deliver that through Famoc's partners in Europe and also to their customers, the direct customers where possible. And that is a big opportunity for us. And we have already yesterday morning, when this was announced, several of Famoc's partners reached out and asked, what can we use from this Techstep stack that we can bring to our home markets? And that is interesting for us. It's a little bit early for us to be concrete on that, but we believe that opportunity is great. In short, we believe the combined forces of the two companies will see significant MMS opportunities in a vastly expanded market and with a serious competitive advantage. Going back to the picture I shown previously, so we see that when adding this capability to our existing customers, we can increase the gross profit per device from our own levels today with about 300 kroner or up to 300 kroner per device per year, which is a significant contribution. So it will definitely improve profitability per device, but we also believe that it will accelerate the conversion rate of existing customers to managed services contracts, given that we now have a very compelling value proposition in our bag. And we also believe that the increased competitive edge will increase win rate and win new customers. So we believe that not only will this improve, let's say, the gross profit per device itself, but it also accelerates towards the target of 1 million devices, as we have set forward.
So in addition to the strategic and operational rationale that we have talked about, this acquisition also improves one of the most important KPIs that we have, as the ARR increases by 40% to 92 million. And we also increased the share of software in the gross profit from 12% to 17%. And as we have touched upon, we see many clear opportunities for cross-selling, both our own services on the Famoc user base. But most importantly, we believe that this acquisition will improve the competitive advantage and contribute to reaching our long-term goals. And as far as financing of the deal, we have secured a 34 million acquisition loan with our current bank. And together with the proceeds from the private placement, we will have sufficient funding to complete the acquisition, realize some of the identified synergies, and strengthen the balance sheet. And we will do the private placement in the near term, and this is fully underwritten by the three largest shareholders, Datum, Middelborg, and Carbon Invest.
So to summarize, this is an acquisition that is spot on our strategy. First and foremost, it will sharpen our competitive edge. It will accelerate our MMS growth in general and increase our gross profit per device. And last but not least, it will open up new geographic markets for us. With that, we are through the presentation and open up for questions.
Maybe we should also mention that we will have one-on-one meetings for whoever is interested. We have, we have set some timers for that, obviously.
Okay. Is there a chat here maybe? Yeah, in the chat there's happening something. That's something else. Okay. If there's any questions you don't want to raise today, please reach out to us. We are available. You find our contact information on our website. Thank you for listening in and have a nice day.